It was the great Pravin Gordhan roadshow. He left the country with a delegation of business, labour and government officials to speak to international investors in the UK and the US to try to reassure them that South Africa is not on the edge of a fiscal cliff, that it can turn a corner and it can avoid a ratings downgrade expected in June, or maybe kicked a little further down the road. We'll get the views of some experts this evening. Meanwhile, there's been a special investigation unit. The Hawks has been pressing hard and adding to the pressure on the minister to provide answers to the 27 questions they would like to have answered, linked to what some have called the rogue unit at SARS. This is the MoneyMakers. I'm Bruce Whitfield. Tonight we ask whether or not South Africa's flirting with economic disaster. I'm joined by Nerina Visser, who's ETF Strategist and advisor, Mohammed Nalla, who's the head of strategic research at Nedbank Capital and a recent visitor to London just in the aftermath of Pravin Gordhan's visit, and the chief economist at Evergreen, Gavcal. It's Worth W. Wray. Worth, let's start with you. The last time we spoke to you was months and months and months ago, and you were Papa Bear on South Africa. Are you still Captain Negative out of Captain America's land?
Look, I do think that South Africa is flirting with disaster, but I think the international environment is much more favorable now. We're starting to see the Chinese government start to pump up what I think could be a pretty substantial fiscal stimulus, and that could start to stabilize China. That is a very big deal in the world today. The other thing is that coming out of the G20 central banker and finance ministers meeting in Shanghai a couple of weeks ago, I think we're seeing a major shift in central bank policy. And I think it's driven by this desire to avoid forcing a renminbi shock. So the European Central Bank and the Bank of Japan are treading very lightly so as not to send the dollar higher and force the Chinese government to let their currency free float, which would be a big shock to the world. So those two things combined are changing this environment. I think it's going to mean a weaker dollar for a while, which is going to allow a commodity price reflation to some extent, and it's going to take a lot of pressure off of emerging markets like South Africa. Now, that creates a window of time for South Africa to get after very aggressive reforms and sort of recapture the world's faith before the dollar comes back and these pressures return. So it's a window of time that I think South Africa can capitalize on. This can change the game for South Africa, but there is no time to waste.
Now, how big is this window that you refer to that South Africa has at its disposal? Is it one of those little windows that you might get in a toilet cubicle on a train, or is it a little bit more expansive?
I really don't know, and that's why I stress the importance to get on reforms and regain the world's faith here. This may be a 6-month window. It may be something that lasts a couple of years. It's just very difficult to say. This shaky truce between central bankers is not necessarily something that will last a very long time unless it feeds back into higher inflation in the Eurozone and Japan and helps to serve those central bankers' policy goals. I do think that Chinese fiscal stimulus is a little bit longer creates a little bit longer of a window, but there's a lot of other things in the world that can go wrong. So if y'all get on it now, then I think you could avoid this currency collapse. The problem, of course, is that with Julius Malema and the EFF getting even more attention, even getting a spot in the Financial Times in the past couple of months, as if Malema is the answer to South Africa's problems, it's going to be difficult for y'all to do the right kinds of reforms and move in the right direction when you have this populist pressure kind of coming from the wrong end.
Okay, that's the view of Worth W. Wray this evening. Y'all, around the table, y'all, you went to London. It was a day after the finance minister and his entourage, his South African flag-wearing, scarf-carrying entourage hit London. Were the investors you spoke to who'd seen the South African delegation the day or two before, were they as bold away as we wish they were?
Unfortunately not. I mean, we were literally there the day after. We spoke to probably most of the same investors. Some of them had actually seen the minister in one-on-one sessions, other within the kind of the broader sessions that were held. And the general sense we got on the street in London, Bruce, is that the old trick that South Africa had played in the past of saying, give us the benefit of the doubt and we're actually going to get this across the line, believe in us, that trick's getting a little tired, unfortunately. I think it's very much, and that was really evident in the finance minister's briefing that he gave us yesterday. He's saying it's about South Africa now rolling up the sleeves and showing actual delivery. I think that message was communicated quite loud and clear from the international investor community through to the finance minister. What will it take, I guess, to avoid the credit rating downgrade? Well, unfortunately, in our view, it's merely been deferred. It hasn't been taken off the table just yet. It may be pushed out from June to the December review, but unless we actually see some proper structural reforms, South Africa unfortunately remains predisposed to some weakness. And it's important, Bruce, to note that some of the commentary that Worth's been talking about earlier is that there's some global cyclical factors. And for the last while, that has been against South Africa. But you've got to separate the cyclical factors from the structural South Africa-specific factors. And that's really where we need some hard fixing to go in.
Pause there for a second. The downgrade deferred, to misquote Thabo Mbeki. But his was the dream deferred. Ours is the downgrade deferred for now, Nerina. How big a deal is Worth making out of Julius Malema and the lunchtime interview with the new Financial Times correspondent? Makes for terribly entertaining reading. Nice diversion for FT readers. Do we take it that seriously, that this is the heir apparent to South Africa's political mantle? If it's that serious, then we've got a problem.
I'm not sure that we view it as the heir apparent, but I do think we need to take it seriously, because I think Julius Malema is telling a very important story and is bringing a very important message of the state of the nation, the real state of the nation in South Africa. So I don't think we can dismiss him. We might not like what he says, and we certainly don't like the way in which he says it, but I think we need to listen to what he's saying behind the popular rhetoric and behind the sensationalist terminology that's being used.
He's representing a disaffected, large community of disillusioned, disappointed, economically disenfranchised South Africans.
And therefore to dismiss him would be absolutely disastrous.
Thank you for filling it in so nicely. There was a fantastic piece in the Sunday Times written by, amongst others, Colin Coleman from Goldman Sachs. Christopher Visser had added his 5 cents worth there. Jabu Mabuza had written his piece. And they'd sort of given a 10-point plan. These are the 10 things South Africa needs to tackle. If there was an ideological bus that was less like what the ANC has been talking about for the last 2 decades, it was in that article. However, this glasnost that we see, I like the word, between government, business and Labour on this road trip surely is indicative of hope.
It signals intent, and I think that's very encouraging, Bruce. I mean, the fact of the matter is we haven't had these 3 key stakeholders at the same table for quite some time. We've frequently written about this general distrust that was always apparent between the private sector and government and Labour. The fact that they're now all talking to the same hymn sheet, that's remarkably encouraging. That means that perhaps a lot of these players will become a lot more pragmatic in terms of there's going to be sacrifice. There's going to be compromise probably on all 3 sides of that spectrum. But at the end of the day, provided it has a beneficial outcome to SA Inc., that certainly would be taken as a positive. Again, I'll just reiterate the point. It's a signal of intent. The international investor community, after December last year, is saying, we've given South Africa the benefit of the doubt for many years now. Let's actually see some real delivery.
And it's this small window of opportunity that Worth sketches for us, isn't it, Nerina? I mean, it's this tiny little window, and it could be a 6-month window, it could be a 12-month window. It might shut very firmly soon after that.
And I don't think it's the time horizon of the window that concerns me as much as the size of the window, because unfortunately 2 of the things that Worth mentioned from a global perspective actually will be to our disadvantage in South Africa. Let's think in terms of the commodity cycle maybe turning again, where you've got sort of renewed interest in emerging markets and in commodity prices and so on. The problem with that, of course, is that within the emerging market spectrum, we are not the flavour of the month. We are not the preferred one. So just as we fully participated on the downside, I don't think we're going to be the first emerging market they'll come back to.
We've never been the preferred emerging market. Maybe not never. We haven't recently been the preferred emerging market. But the rising tide does lift the boats.
But the problem that you have is in the second argument, and that is around the weakness in the US dollar, which necessarily translates into strength in the rand, which means we will not be able to actually fully participate in whatever further increasing wave there might be. So I think I'm erring on the side of a small toilet cubicle window. I don't quite see the expanse of patio sliding doors.
I need to talk to you because you're far more optimistic than my colleagues are here in Johannesburg. Worth W. Wray in the United States. Just give me a sense of this window that you talk about, the opportunity that is presented by the rising tide for emerging markets. How does South Africa get to participate in that tide?
Well, I think Nerina is right to point out that South Africa is not necessarily the leading emerging market to reflate and enjoy that. Unfortunately, there's been a lot of damage done, especially over the last several months. And, in the West, when South Africa comes up in conversation, the term failed state is on a lot of people's lips. So there are a lot of people who are very, very concerned that South Africa is going in entirely the wrong direction, and downgrade is the least of our concerns. But I do think that the international environment is favorable. I do think that not incredible strength in the rand, but a modest reflation in that currency with commodity price recovery could be very favorable to South Africa, both being able to do the reforms that it needs and sort of come back into to favor with Western investors. So I think that the window may be a little more generous than what Nerina is profiling, but I do think that it requires a lot on South Africa's part to benefit. In the event that this does play out, though, I should frame this. In the event that you do see global growth start to stabilize and the dollar start to weaken, then that's going to result in a pop in U.S. inflation data. And that's going to result likely in the Federal Reserve coming back and being more aggressive with interest rate hikes, which will bring the dollar back and it will renew these pressures.
Okay, I'm bored of talking to you now too, Ray. I'm bored of you talking to you now too. You're also going negative on me and scaring me a little bit. Let's go back to one last question for our local participants of this conversation this evening, and that is the politics. Neither of you is a political analyst, but the pressure on President Jacob Zuma is mounting day by day by day. People have been talking about this pressure for the last 2 years. It seems to be intensifying and the negative news flow is accelerating. The most recent ruling against the government on the al-Bashir, the failure of the government to arrest al-Bashir in breach of the Constitution. The President has a date with the Constitutional Court. That could be make or break for a decision for the ANC to say, you know what, maybe this ship needs a new captain. Perhaps with a new captain we can arrest the tide, the red tide of the EFF. We can arrest the tide of negativity and mistrust. Is that too optimistic?
Well, I mean, Bruce, first and foremost, I think politics was front of the agenda with almost every meeting that we had in London last week. And on that basis, despite the fact that, yes, South Africa will be dragged along with other emerging markets if we get this reprieve in terms of global risk on, the fact of the matter is this political backdrop has left investors rather uncomfortable. A lot of them are already underweight South Africa, so it's not likely to cause a swing at the margins, but they're concerned around the political risk.
Last word to Nerina. Your assessment of our politics versus our economics and the intertwined nature of the two.
I guess the question will be at the end of the day, who's going to face the Constitutional Court, Jacob Zuma or the ANC? And I think the ANC is going to have to make the difficult decision of, do they allow him to take the fall on their behalf, or will they continue to stand behind him? We're certainly going to be in for a very interesting time. I think South Africa must top the global rankings in terms of countries scoring own goals. And if we can just stop sort of, playing to our weaknesses and rather focus on our strengths, then I don't think the political backdrop, which is not that unique in a global context, I don't think it will be as detrimental as it currently stands where we are now.
Yeah, I tell you what, if we took our sports team's record on the field of play, and pretty much aligns with our political field of play as well. Nerina Visser, ETF strategist and advisor. Worth W. Wray is the chief economist at Evergreen Gavcal, and Mohammed Nalla is the head of strategic research at Nedbank Corporate and Investment Bank. There will be more economic stories and stories of sabotage and time running out and political claws being sharpened on the pole of expediency. Until next time on the MoneyMakers, thank you for watching. Good night.